Now that the retail portion of earnings season is in full swing, we're seeing, frankly, a lot of not-so-hot numbers. Sure, Walmart beat expectations yesterday, but only because they gave you a dismal forecast in May and then lowered the bar again late last month. Lowe's just had a mixed quarter with shrinking same-store sales, although good do-it-yourself orders. Target appeared to turn into, well, let's just say it looked like it did. Top and bottom line misses, pitiful margins, but we know that they already told you they had a problem. They had too much inventory, and that brings me to this piece. See, I think Target's emblematic of what's going on here. This spring, consumers fully adjusted to the post-pandemic reality. So they started spending their money on travel and leisure rather than just buying stuff for their house. Right? They had enough of the house. That caused most retailers to be stuck with a ton of excess inventory in parts of the house that, well, you can imagine, say, TVs or systems that surround sound. And that is the bane of your existence when you're running a store, because you can't bring in new stuff until you get rid of this old, bulky stuff. Can you imagine if you had a store stuffed with these? How do you have flannel shirts in these? You can't. You just have a lot of these. Get me? As the situation unfolds, I keep coming back to the one group that does benefit enormously from this retail inventory glut. I'm talking about the off-price chains. Think TJX, think Burlington stores, think Ross stores, and my fave, Ollie's Bargain Outlet. Proud member of Ollie's Army right here, right now. Now, these companies buy up excess inventory from distressed retailers for chump change, then sit on it for a while, kind of figure, all right, let's wait. They have the patience there. And then they mark it up and sell it to you. When you listen to Target's conference call, it's clear this moment is nirvana for these off-price chains. Practically the first thing CEO Brian Cornell, whom you know I think is great, talked about was right-sizing his inventory position. They've been working like crazy to discount these items and get them out the door. Target's executives talked about getting super promotional to move merchandise, dramatically scale down what they're buying for the future. But there's a third component to their inventory reduction that they didn't talk about explicitly. Selling this stuff to off-price chains to just get it out of the stores entirely. Stop taking up key store space. That's what I have to look at. It's like geography. And they were taking up like Texas and California. You get it? Right, what happens after a company like Target has tried promotions and before they start taking on new inventory for the fall? In other words, it's going on right now.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.